Everyone, welcome to another episode of Data Driven Value, where we give you the tools and the knowledge to help you take your financial freedom into your own hands. My name is Mark, and thank you for joining us today. We're just going to jump right into things here. So first off, we're kind of going to take a little bit of a look at some news for the day. We have some economic numbers coming out today, the initial jobless claims. So we have it coming in at 217,000. We had the estimate at 210,000 and then the previous at 203,000. So a little uptick there from our previous read, as well as slightly above estimates. Nothing too concerning as of yet, but interesting to note that, initial jobless claims are starting to tick up a little bit, indicating maybe the start of some economic slowdown in the near term. Looking here kind of, if we go over to our money market funds, so that's the total amount of assets in money market funds overlaid on our SPY. Here I've just kind of marked some areas where we did see large downward moves in the SPY. So these are typically kind of recessionary forces here. So obviously this would have been kind of as a result of the dot-com bubble here. This would have been our great financial crisis crash right here. And then this was our COVID crash right around here. And then we had our 2022 yield curve inversion scare crash kind of right here. So interesting to note kind of when these two lines go on these large divergences like this. You can see generally that actually coincides with some times of economic weakness. Alternatively, we can also see kind of as the S&P kind of gets above the money market funds in terms of performance here. Sometimes it's just due, I guess, for a bit of mean reversion. So while this wasn't a recession here, I do believe it was a necessary flush of excess capital in the market. I do still believe there is a lot of froth in the market, a lot of money kind of circulating since COVID. Generally, we printed about $2 trillion, and most of that kind of found its way to some of the richest people in the world. These are the people who own all the assets, and they're the ones who have all the money in these market funds, as well as a lot of the money in kind of the assets that are pushing this SPY up. It's interesting to note that the SPY, about 50% of the gains did come from a handful of stocks, so you'll hear those referred to as the Magnificent Seven. So just kind of the top tech stocks have really been supporting this broad rally, this broad rally of the SPY here. We'll be watching this here just to see if we get something similar kind of to here where the SPY starts to tick down, in which case we might be due for that kind of inversion of the two lines, and then also maybe some subsequent or some weakness there in the SPY. I would consider that a buying opportunity. SPY, it's not too bad to be DCAing into it at the current risk levels or price. That being said, you obviously do have to recognize we are just pushing all-time highs essentially, and showing a little bit of slowdown kind of on the short-term time frame. So we just might be due for a little bit of consolidation in the SPY, or even just due for a little bit of a pullback, maybe retest some lower support levels, and then hopefully just continue up. Ideally, we do see favorable economic conditions with the new administration coming in, but we're not going to make any assumptions. We're just going to follow the data and make our decisions from there. So taking a look now, we can kind of look at our macro recession risk dashboard. So this is an Into the Cryptoverse tool here. You can access it. I believe this one is a paid tool, but there are tons of free tools available as well. So just looking here, essentially we're looking pretty good across the board. Obviously unemployment numbers, national income and product metrics, as well as production and business metrics. Nothing looking too concerning here for us. Where I do see a lot of concern is this treasury yield spread. So that's if we have the 10-year and the 3-month essentially overlaid on recessions. I showed this chart prior, but you can kind of see how every time that this pair uninverts, it typically kind of coincides with a bit of a recessionary time. Obviously, we're in that inversion rate here now. We have uninverted. So just keeping an eye on that. We might just be due for a bit of weakness. It could be a quick kind of dip like this here. That was actually about 30% dip in the stock market, I believe. So saw about a 20% dip up here. Generally, if we do see a 20% or larger correction in the stock market, I am going to be looking at accumulating a position. I think those are great opportunities to accumulate the SPY, because generally it should just continue trending up and to the right, but there may be these periods of downwards price action. So we really want to take advantage of the dips if we do get them. But we're not getting too aggressive where we deploy all our capital up here and then we wish we could buy more down here. So just being patient and coming up with that strategy ahead of time. Yeah, moving on here, we take a little look. Trump here planning first crypto reserve, prioritizing US-based coins like Solana and XRP. So we see here Donald Trump plans to create an America first crypto reserve, focusing on US-based cryptocurrencies like Solana, Ripple, USD. There are a handful of cryptocurrencies that are based in the US, so I would not focus solely on these. These are just some of the more well-known ones, especially amongst some of the higher net worth individuals. But I wouldn't be surprised to see more kind of US-based cryptos be included if this kind of bill or this kind of ETF were to ever start trading. Again, though, it's all speculation, so we're not gonna take any trades or positions based on speculation. Solana is a great asset regardless, so as a crypto investor, you should be looking to try and get a position in Solana. But that being said, we're not going to take in a risky position, so we'll just wait and see if we can get a good entry. XRP, it's been crazy kind of this cycle. It was about 50 cents around that stablecoin status throughout the majority of their SEC lawsuit. Pretty much looked flat for the longest time, and then just due to a few catalysts has rocketed all the way up and past $3. So crazy moves by XRP. Not too surprised given the strong backing they have with their community. And then obviously, yeah, the connections with some of these higher net worth individuals or politicians. USDC coin. So another thing I will just touch quickly here on, we see USDC circulation soars 78% in 2024. So interesting to see Circle USDC coin. This is the only regulated stablecoin within the United States and Europe, as well as Canada. Circulating supply increased by 78%, showing that it's being more and more adopted by different people. 500 million users across 16 blockchains, facilitating more than $850 billion in transfers. As well as in November 2024, they surpassed $1 trillion of volume for a total historical volume of over 20 trillion. So interesting to see and nice to see Circle's growth here. And it is nice to actually have access to a relatively safer, more transparent stablecoin as opposed to Tether. We can see here experience rising adoption globally, again, due to the compliance with international regulations. They're the first stablecoin to earn a license under the MiCA framework, so that's the European Union. We also did just see USDT, so that's Tether, the largest stablecoin in crypto, actually had to delist from a lot of European exchanges because they do not have this MiCA framework in place. We can also see that USDC meets Canadian listing rules. It's the main stablecoin that I personally use here in Canada. It also ensures that digital dollars like USDC promote global economic inclusion. So interesting to note, USDC making all the right moves in the regulatory department and kind of beating USDT to the punch. However, USDC still trails behind Tether's USDT market cap, and USDT does still remain the most widely used stablecoin, and they did see a 50% market cap increase as well in 2024. So not quite as fast of an increase as USDC, but when you're talking about sheer size, you see that USDT they increased kind of to the tune of hundreds of billions of dollars, whereas USDC is kind of tens of billions of dollars now. So good for USDC. Hopefully they keep kind of taking this market share. I would be surprised if we don't try to see Tether kind of gain some of these regulatory approvals as well. Assuming that nothing nefarious is going on behind the scenes. Tether does reportedly hold a large amount of gold, government treasury bills, as well as Bitcoin. The stablecoin is supposedly backed relatively strongly. But again, there is still that ambiguity where some people are unsure. We can't actually see the reserves for ourselves, so it's kind of like a trust me bro scenario. Nice to see Circle here kind of going the more traditional route, being more transparent and working with the regulators to get those approvals. We also see in Abu Dhabi, both firms announced plans to support the stablecoin's growth in digital financial services. They've partnered with Binance as well as other large companies like MoneyGram and Chipper Cash, providing seamless on-ramps for converting USDC into local currencies. They've highlighted further growth opportunities in areas like global payroll, supplier payments, and point-of-sale solutions. Also noting that the digital euro, also from Circle, has gained traction in 2024, obviously due to the delisting of Tether and likely most people switching their whatever they had in Tether to the EURC. And again, Circle expects further regulatory developments in countries like the UK, Brazil, Singapore, and Japan. So really good from Circle here, kind of securing those regulatory approvals and expanding their footprint. Whereas kind of on the alternate side of USDT, we're seeing it getting delisted from more and more exchanges. Generally, this is just kind of due in Europe. It's because of the micro regulations. In the States, they kind of argue the market distribution is a little unfair. There's a bit of lack of reserve clarity, some past legal issues, as well as the dominance in the market issue. So just keeping an eye on that kind of situation as we watch USDT and USDC. If we continue to see USDT delisting from more and more exchanges, maybe it becomes kind of the decentralized option for the crypto market, where USDC might be able to capture some of that more centralized liquidity as the main stablecoin provider. So we'll go quickly back here. Looking again, that first America Crypto First bill. New York Post reports that President-elect Donald Trump is thinking about creating an America First Strategic Reserve that would favor US-based cryptocurrencies, so USDC, SOL, and XRP, although I would argue there are a handful of other cryptocurrencies in the top 100 list that are based in the States and might be an option to be included within some kind of fund. Trump recently met with the creators of these cryptocurrencies, is open to the idea. So a little interesting thing to note here, XRP for one. We did see XRP here. Ripple's chief legal officer says the SEC law site is likely to be abandoned by the next administration. What's also interesting to note is that the Brad Garlinghouse and the chief legal officer here did meet with President Trump when he hosted these executives at his place. So interesting there. There is that connection between the two of them. And then, yeah, obviously he's alluding to that case being dropped in the future when the new administration comes in. Alternatively, on the other side, we do see here that the SEC also officially files their appeal in the Ripple XRP suit. And then here is obviously their opening brief. So essentially all they're doing is rehashing the same argument that they gave previously with a little bit of different wording. So we'll see what kind of comes of that, but I would expect this lawsuit kind of not to go anywhere, because Gary Gensler's out of here when Trump gets in. The new SEC lead is going to actually be a crypto-friendly lawyer. So yeah, we'll watch that, but I wouldn't really expect anything to kind of come of this appeal. Moving forward, we can kind of take a look here further, kind of along this lines. We do see met with the cryptocurrency creators, could lead to setting up a Bitcoin reserve and stopping banks from refusing to work with cryptocurrency clients. So under the Biden administration, we did see that choke point 2.0, preventing banks from allowing clients to access crypto and crypto related services. So definitely want to see this being enacted. My priority is kind of around that dissolval of the choke point 2.0. And then, yeah, the Bitcoin reserve would be great, but at the same time, I really just want that regulatory clarity first. We also see that expecting to kick this plan off, several companies are starting to accumulate Bitcoin in their financial reserves. So we have covered that in previous videos, kind of some of the different companies that are adopting a similar strategy to MicroStrategy, putting Bitcoin on their balance sheet as fast as they can, kind of in anticipation for the incoming administration. Also, individual states getting involved too. So we can see here another Bitcoin Strategic Reserve bill introduced in Oklahoma. While Oklahoma's pension funds and state savings account to allocate a portion of their assets to Bitcoin. We see that several U.S. states have pending legislation to establish a Bitcoin strategic reserve, and several state pension funds have already diversified into Bitcoin. I do believe there's about 20 or so bills right now kind of in the works in different stages throughout various states. So definitely a lot of adoption for the Bitcoin Strategic Reserve on the state level. This would allow the state treasury to invest up to 10% of its assets in Bitcoin. In Texas, the Reserve Act was filed on December 12th, so way ahead of the curve there. North Dakota, New Hampshire quickly following suit, and we also note that the New Hampshire bill uses the blanket term digital assets as opposed to Bitcoin Strategic Reserve, signaling that there may be the potential to diversify crypto holdings beyond Bitcoin. So interesting to see there, but yeah, we do have a lot of support for the Bitcoin Strategic Reserve on the state level. We do see here Trump's approach to relieving markets. We're finally relieved after years of harsh actions by the Biden administration, most notably the choke point 2.0. Banking regulators from the FDIC instructed banks not to engage with cryptocurrency companies. So definitely stifling growth here and preventing investors from getting access to the assets that they wanted. So not sure they had the best interests of people in mind here. We see a lot of people wanting to buy different cryptos now. If they actually had clear, concise regulations, then they may have been able to acquire some of these assets at the cheaper prices in the bear market. But unfortunately, it is very hard to access crypto depending on your jurisdiction. So there are some hoops you'll need to jump through kind of geographically depending where you're located. Hopefully with the new administration and some new clear regulations, again, a lot of this is kind of resolved. We see here Trump also pledges to fire Chair Gary Gensler, as well as pardon the Silk Road founder Ross Ulbricht. So definitely want to see those two things happen. I do believe he talked about this before. He didn't do anything in his recent presidency, but perhaps just because of the support he had from the crypto asset class, crypto investors, the whole kind of space that helped him with that election win there, then maybe he'll be more inclined to kind of actually follow through with his crypto related promises. So quickly now, just looking at XRP, obviously, this is kind of what I was talking about, how it just hovered in this range for the longest time, doing nothing. And then we've just had some massive catalyst breakout news. So obviously someone knew something down here. We see this huge breakout again. We see another large breakout of this downsloping trend line. We can kind of zoom into the 4-hour, take a look, see how we're doing. We do see the RSI and the MACD are quite overextended right now. Taking a look as well. Let's look at our indicator dashboard, see if there's any big buys coming in. So yeah, we did see our whale buy indicator flash down here on this dip to $2. So definitely big money was positioning themselves for this move. RSI again, a little overheated. If we look at our bull market support band, we're sitting above that, quite high above it, so safe there for a bull market perspective. We are above this volume shelf here acting as support, as well as we do have these Lux Algo order blocks down here. So what I'm going to be looking for in terms of a play on XRP, essentially, assuming this is going to be a bit of a swing position, a bit also of a hedge position, because I do believe we might be in for a bit of market weakness. So I've kind of exited some of my other swing longs in profits, and then I'm just looking at other opportunities I can take here. So obviously XRP, lots of relative strength. So looking at it, I'm going to be looking kind of for an entry anywhere, maybe starting at the 0.5 Fibonacci. This is going to be a very small entry up here, ultimately, again, reserving the majority of your capital kind of for this lower region in here. Yeah, so looking about 275 or lower is what we're going to be wanting to build this swing long position on XRP. And then again, we're just kind of looking to capitalize on a move where we come back, test support, and then continue higher up. So watching XRP there. Another thing I want to look at is, let's see here. So I just have a list here of some other US-based cryptos, kind of just to see the relative performance of them. So obviously XRP was explicitly listed and it's up 4.5%. HBAR, interestingly, is another one that is US-based, but it is coming right into this resistance. HBAR could be another candidate to be included in that if that were to be a crypto ETF or reserve. So yeah, we got XRP, basically green across the board apart from SUI and Filecoin and Optimism and Arbitrum. So of these, obviously XRP, Solana, Cardano are going to be major contenders for that bill or for that reserve. I would also argue SUI, but it is relatively new, so we're not too sure how kind of they'll feel about that one so far. We got Filecoin, obviously, HBAR. A lot of people speculating that HBAR will be included. Otherwise, I don't know why it would be up kind of this much on the day. But yeah, we can see US-based cryptos doing well, kind of, I assume, on that news. People are going to start speculating about other coins that may be included kind of in the potential reserve there. So yeah, looking at Solana. Here again, sorry about that. See, we've got this trend line here. Kind of came into it again. Fortunately, rejected a little bit. We're coming back down. Looking for that entry in Solana. We pull our Fibonacci again. We've got that 618 here. You could go all the way up. So anywhere from like 190 down to about 180. I'm going to look to build a swing long position in Solana. Really just looking to try and capitalize on a bit of a hype move there. So yeah, Solana looks good. We won't look at too many of the others just because we aren't sure if they'll actually be included in any of the bills. It is just speculation, but important to note that the wording here, just due to the America First Crypto Reserve, really, if you're just focusing kind of on different assets that are headquartered within the US or that have US operations, or sorry, primarily US operations. Yeah, so we were watching that. Again, Solana looking good on the high time frame. Broken out of this wedge, came back, has retested it twice. I do want to see this high of 225 get taken out. Otherwise, we kind of are still in this lower high, lower low type structure. So in which case we might, if we just continue back down, could continue back down here. If we do print a higher low, 175, again, that might be a good swing long entry, or not swing entry, that might be a good mid-cycle buy there, kind of just to ride this continued breakout. Yeah, moving on, we got to look here. Yeah, we touched on that. So SEC, basically we see SEC Gary Gensler not backing down crypto as he exits. A little ridiculous considering all the wording from the new administration, as well as how many L's he's taken in court. So he's not backing down from his views about cryptocurrency industry. Many in the crypto field are not complying with our time-tested laws, and then arguing that it's highly speculative. So something being highly speculative doesn't mean that it's not complying with their time-tested laws. And a lot of the companies that are actually under scrutiny have expressed to courts that these laws are not clear and concise enough for crypto and related assets. And they've actually won some of these claims in court. So the fact that he's saying many in the crypto field are not complying with our time-tested laws is a little bit of garbage, just because it's been proven that they have not laid out the necessary framework for the assets in court. So really just beating a dead drum here. Gary Gensler spent much of his tenure clashing with the biggest players in cryptocurrency. So for a while there, it felt like everybody and their mom was getting a Wells notice. If you invested in crypto, you were getting a Wells notice from Gary. Yeah, interesting to see, obviously. Yeah, he spent a lot of his time really fighting the crypto space, which is interesting because as a professor at MIT, he was actually a crypto advocate. So big change of tune as soon as he kind of got into a position of power. We see Trump pledged to fire Gary Gensler, and he would be replaced by well-known crypto lawyer Paul Atkins. Atkins made it clear that he favors clearer regulations of cryptocurrencies that don't stifle innovation or impose unnecessary oversight. Gensler refuted the notion, saying their approach to regulating crypto played a role in the Democrats losing the 2024 presidential election. While his approach to regulation by enforcement may have not played a direct role, Trump's support of crypto and the bad taste we had in our mouth as a result of Gary Gensler's approach really did play a role in kind of not swaying, but really influencing the election in a meaningful way. There are millions and millions and millions of voters in crypto. So to say that we have no effect, that's really just what they want us to think. Yeah. So I do think that crypto voters and crypto support of presidential candidates did have a factor on the election outcome. And then despite his concerns about cryptocurrencies, Gary Gensler allowed BlackRock and 10 other money managers to launch spot Bitcoin exchange-traded funds. That being said, he did everything in his power to stop that at every will. He finally got to the point where he could not deny it without just cause. And he was essentially forced to kind of allow the Bitcoin ETFs to finally be approved in the States. So saying that, kind of trying to make him sound like, he's not the worst guy. Like he's allowed us the Bitcoin ETFs. That's a bunch of poop. I think he really did everything in his power to kind of stifle innovation and stop us from accessing these investment vehicles. He also said, obviously, was influenced by a court ruling against the SEC. So right there, obviously, the court ruling was what influenced him. If it was just his way, then I don't think we would have the ETFs today. We also see Federal Appeals Court ruled the SEC needs to better explain why it turned down a request from Coinbase to develop regulations to cover the crypto world. Gary came back again saying not liking the law, not liking the rules doesn't mean there aren't laws and rules. Or what in reality is happening is the current rules are so old and outdated they don't apply to new technology and investment vehicles like crypto. There's way too much ambiguity and uncertainty. The industry has asked explicitly for clearer regulations, and the SEC just gives us the same answer every single time. And then generally, again, they follow up with more regulation by enforcement, including a combined $45 million in civil penalties to settle with Robinhood Securities for offering crypto and crypto-related services. So interesting there. Don't know why Gary won't just throw in the towel. He's gone in a few days. But obviously the SEC has their mandate and he's sticking to it until the very end. Looking here, we have Coinbase launching DeFi-backed Bitcoin loans for US users. So a little sour taste in my mouth kind of reading this article, but it also is good kind of going forward. We do need to see a better and safer kind of option to have access to Bitcoin-backed loans. Last year, we had some shady actors kind of offering these loans, and then they were taking the funds and repurposing them for kind of very degenerate activities. Ultimately, they ended up losing those funds as well as crashing the market just due to a massive over leveraging of other people's assets. Many people lost their Bitcoin. So just remember, anytime that you're taking a loan where you're transferring your Bitcoin to anyone else, you no longer have access to those private keys. So I'm not sure how these loans will be structured. I'm not sure if you still maintain access to your private keys. But at the end of the day, it doesn't really matter, because if the market circumstances are to be unfavorable, you could be at risk of getting liquidated on those loans and losing your Bitcoin. So just a key thing to keep in mind, these aren't risk-free loans. You do still have the opportunity to be liquidated or lose your assets, again, if the market acts very unfavorably. So we see them bringing back Bitcoin loans for US users. DeFi lender Morpho will facilitate the loans. They can once again borrow against their Bitcoin directly through the exchange. Available to U.S. companies excluding New York, will be made available to additional jurisdictions over time. Crypto 2022, this is what I talked about. Several multi-billion-dollar crypto lending firms, including Celsius, Genesis, BlockFi, FTX. I don't know why they're not listed here. They are the largest culprit. But again, resulting in billions of losses and turning both users and investors away from the idea. This is what I talked about. A lot of these platforms were taking our funds and then repurposing them to trade with themselves, essentially using us as their own little piggy bank for their degenerate activities. They ended up losing a lot of that money and then ultimately not being able to pay back any users and going into bankruptcy. Many users still without their crypto, their money, or their Bitcoin to this day, waiting for that to kind of be resolved and hopefully get back whatever they can. So again, really kind of approach this with a grain of salt. Make sure you do understand the risks associated with it before you start taking out any Bitcoin loans. I myself took out a couple Bitcoin backed loans with Celsius last cycle. I was able to close them. The only reason I did close them is I just kind of had an uneasy feeling in my stomach about someone else having control of my Bitcoin. Kind of defeats the whole purpose of Bitcoin to me, in my opinion. So I closed those, I got my Bitcoin back, and I was ultimately able to avoid any kind of impermanent loss through that. We see July 2023, the Coinbase did axe their program following an SEC complaint. So they did try Bitcoin-backed loans before, and they were forced to kind of axe that whole plan again because the SEC. But with the new SEC head coming in, I do expect we may see some more encouraging language from them. How do DeFi loans work? All loans are over collateralized. So essentially, it'll probably be like a 2 to 3, maybe more. It'll depend kind of what interest rate you're going to get, I would also think. But you over collateralize your loan so that if you provide 3x collateral, you want to borrow $50,000, you're going to have to loan them $150,000 of Bitcoin. That just prevents against any market volatility. So if the price were to drop, so let's say 70%, that loan would still be sufficiently collateralized. However, it may be different kind of what your liquidation level and your interest is from loan to loan. But we can see here, borrowers deposit collateral to a lending protocol and then borrow another asset at a dynamic interest rate determined by the demand for the borrowed asset. And then we see because DeFi loans are over collateralized, borrowers don't default on them. Instead, the lending protocol lets their collateral be liquidated. So that means your Bitcoin will be sold. They will cover the cost of the loan, and then that will be that. So you do still have the risk of being liquidated. It's not risk-free. Selling collateral to cover the cost of borrowed assets, so the protocol doesn't accrue bad debt. Liquidation can happen if the value of a borrower's collateral drops or if the interest rates raise too high. So a couple different ways where it can affect potential liquidation. While Coinbase offers loans and covers the network fees, it doesn't protect users from liquidation. So that's really important. Customers will be responsible. I'm sure a lot of people will see this, oh, it's backed by Coinbase, it's got to be good. But we see here, it is explicitly stated there is no protection from Coinbase regarding these loans. So really do your own due diligence. Make sure you understand the risks before you're kind of engaging in any activities like this. Last but not least, we'll just touch quickly on a little bit of minor news. We see here Asset Management closes their position in Mara. So not a massive position, but they did have about $2.5+ million position in Mara. And we see that they've dumped the whole position. And then we also see that they've bought CleanSpark. So you see just an asset management firm dumping Mara. Interesting to see them dump Mara kind of after that new authorized share increase proposal, and then seeing them acquire CleanSpark. I'm also kind of seeing a bit of this sentiment in the retail space on Crypto Mining X or Bitcoin Mining X. Personally, I'm not really in the camp of chasing all these different runs. A lot of people rotate from miner to miner to miner looking for the next runner. I just try to position myself in the companies I think are strong based on the fundamentals when the valuations seem cheap. So CleanSpark is my major holding. They're my top Bitcoin miner. top pure play Bitcoin miner for sure, and then followed by Iris Energy. They are my top hybrid Bitcoin miner currently, and then Mara is actually my third largest position, kind of just due to the massive liquidity they have, as well as their liquidity to market cap ratio and just the sheer size of the business. It is key to note that CleanSpark and Iris, I would argue, have much better fundamentals in terms of production and mining and profitability, while Mara really just has that massive liquidity, kind of big elephant in the room. You can't really argue a better market or better Bitcoin to market cap ratio than MicroStrategy currently, so definitely still some value in Mara. I'm not dumping them, but at the same time, I'm really trying to increase my positions in CleanSpark and in Iris Energy. And then if I do see Mara come back under $15 again, I'll likely be a buyer there. But kind of, yeah, focusing more of my capital on other assets in the time being. So that's all that there is for the news today. Maybe we'll take a quick look here just at the charts. We can see ETH Bitcoin down, Bitcoin USD, a bit of a dumpage here. Obviously, yeah, we're in this kind of down sloping trend line, hit resistance, kind of coming into a Lux Algo order block right there. But we may be due for a larger retracement, kind of again back to 93.5. Down to about 91.7. I do believe this might be a good position for a swing long. Yeah, so looking here for a swing position, ultimately building it all the way down to about 89, and then ultimately again saving our larger accumulation buys for lower targets in this region. We can see ETH Bitcoin unfortunately has been rejected again. It was attempting to kind of reverse that downtrend structure on the low time frame. So we saw here that higher low, higher high, higher low. But similar to kind of this price action that I've marked right here, we did have that, which ultimately broke down. So again, we're not looking too good. We might just sweep these prior lows right here. We do have that Lux Algo order block. But yeah, interesting to see weakness in both Bitcoin and ETH Bitcoin. Alternatively, though, we are seeing a little bit of strength in the altcoins, which is interesting to see altcoins performing well and not Bitcoin, or not ETH in that. Sorry about that. But yeah, so altcoins breaking out. We will see, obviously, cook out that high. We're going to look again for that higher low to enter on. Kind of there's this confluence of this Lux Algo order block down here, so we might look for an entry right there, and then others kind of coming into resistance, hasn't broken, or others dominance again, hasn't broken out like total 3 USDT, but interesting to see coming into resistance. We may reject here and just kind of come back there again. I do just believe we aren't going to break out imminently. There's a lot of hype kind of around the new administration coming in, so we'll see if this is a buy the rumor, sell the news event, or similar to kind of the ETF when it was launched, we had a little knee-jerk reaction to the downside. It was quick, but it did offer a great buying opportunity. So I'm going to keep my eye out with with opportunities like that, looking for quick little dips to just buy and get later cycle accumulation or swing trades in. But yeah, and then we can take a quick look at our macro. Obviously, we're kind of red across the board except for gold and silver. So looking here, gold actually looks really good, not really ideal for our risk assets. We see it in this technical uptrend breaking out, and likely our next stop is kind of this order block up here. Yeah, so looking for a 2750 to about, around 2750 is what we're going to look at for a target for gold. Generally, until that has topped out, then we're looking at risk off assets, maybe consolidating a little bit. We can see the DXY also here. Again, we're kind of holding that uptrend structure. Looks fine. Let's see if we have any indicators. Yeah, quite oversold. Again, we could see some strength kind of come from the dollar. This wouldn't really be ideal for our risk assets, but that's that. Miners, again, kind of flat or red across the board, so might be a time to kind of go reflect at on my past videos of the miner buy levels and kind of see if there's any opportunities there for us. I do think we just need to see a little bit more retracement. Again, on that macro front, I want to see Bitcoin kind of come back and retest these lower support levels, kind of in the low 90s, before we can continue up. But we'll be looking for that. So just watching the market, seeing how price reacts, staying up to date with the news, and then coming up with a plan as the chart kind of shows us what the most probable move is. So I want to thank you for tuning in to this update. As always, we're here to give you the most up-to-date news, access to the tools and the knowledge to help you kind of navigate these markets. Thank you for tuning in. If you enjoyed the content, please like, subscribe, and share. I do have to run, but I will try to keep the updates coming as frequent as possible. Feel free to drop any chart requests in the comments below, and I will cover those on the next episode. Thank you for tuning in to Data Driven Value. Have a great day, guys. I'll see you next time. Bye.